today we're comparing two JSE listed banking giants head to head. Now let's look at the corporate and investment banking and compare Rand Merchant Bank to Standard's corporate and investment banking division. Jean-Pierre, let's get your thoughts first of all.
Well, firstly, we're looking at two universal banks tonight, which means that they have both retail operations, borrowing, deposit taking and lending, but then also investment banking, which is the division we're looking at right now. Globally, the regulators have been getting involved in asking banks to unbundle these two big lines of business, saying that when it comes to retail banking, you shouldn't have risk for your investment banking division flowing into retail banking and impacting the man in the street and the safety of his or her deposits. So what that means is more stricter regulations on investment banking, even some caps on bonuses, for instance, and a decrease in risk that banks are prepared to take on the investment banking business, less proprietary trading, less derivative writing in order to fall under these regulations.
So regulation, the name of the game. It's going to impact across the board. Who's going to stand strong?
Well, I think it's going to depress profitability, but I think that effect has already largely run its course globally. So banks like Citibank, JP Morgan, and global leaders like that have already sort of suffered the downturn in terms of margin compression and PE compression, and they're now beginning to kind of demonstrate that the profitability levels are not bad compared to their costs. So I think that trend was a little bit masked in South Africa because emerging market banks were never hammered as heavily as those other guys were. Right about now, though, I think it is true to say that there's quite a lot of focus on each and every line of business that they do here, because corporate and investment banking means lending money to big corporate clients, which is very profitable because it's very chunky. And it also means warehousing assets, buying and selling businesses, treasury trading, forex dealing, some highly, highly profitable areas of the business, all of which are being carefully looked at. This thing about not wanting bankers to earn big bonuses, I think is a good thing because it means they must be paid higher salaries if that's appropriate and less risk money so they don't act like cowboys.
Exactly. That's why you've got this cowboy culture that was prevalent in the banking environment.
And that's why we saw the big London whale write-offs and blow-ups and explosions on proprietary desks. So hopefully, if we can have less of those, we'll trade more stable earnings for perception that there's less risk going down the line.
Oh, thank goodness for that. Less risk in the banking system in total. We've got to celebrate that, haven't we?
Yes, I think once again from the man in the streets perspective, it's good that you know when you give your deposits for a bank, your banker isn't going out and betting on it on the markets, and when they lose, you lose your deposits, and when they win, you don't get high interest in your deposits, the banker just gets a bigger bonus. So from that perspective, it's probably fairer in terms of a framework. When we look at the, sorry Bron, but when we look at the two companies specifically tonight, Corporate Investment Banking in Standard Bank and Rand Merchant Bank in FirstRand has used their balance sheet to a much greater extent in the past. They've taken on more proprietary risk. They've invested in businesses themselves, which they then later either trade out of or list on the stock exchange. So if you look back, the profitability of RMB has been higher than CIB. From this point on, as the regulations have changed, it means they're probably on a more equal footing in terms of their risk appetite.
The brand Rand Merchant Bank, is it just my perception or is it stronger than corporate investment banking out of Standard Bank?
No, I would say they're probably similar, and they're definitely the two leading franchises in that space. Standard Bank, I suppose, has the slight benefit that it's got a deeper and more historic client base, but they're very competitive. You know, one will be trying to get some exciting new industrial company as their anchor client, do corporate advisory work for them, lend them money for foreign transactions, structure their lending here, there and everywhere, syndicate and do distributions and money raising for them. They'll be going hand and tongue, hammer and fist, trying to kind of grab the business from each other. So I don't think there's a huge difference in their lineage in this country. I think they're both excellent, and I think they both will continue to expand those franchises globally. There's more work to be done for both these teams.
So what are we going with now? Who's hot in the space of the corporate and investment banking arena?
In this line of business, it's a bit more difficult to call. Both are very strong players. They've got certain niches, whether it's forex, equity capital markets, debt capital markets, transactional banking. So this one is more difficult to call. I'll give it to Standard Bank in this case.
Standard Bank. Paul?
I think it's neck and neck. And I was also quite struck by JP's comments that there were some historic benefits and that maybe now it's a more even Steven type of battle.